Welcome to India Market Open. The bulls are back, and how? With 22,600 on the Nifty. We wake up this morning, strong global cues, crude is weaker, some intervention by the Bank of Japan. It's turning out to be quite a morning, but for now, at least D Street is looking fairly well placed.
Were they ever away? So that's my question. Were the bulls ever away?
They were struggling a little bit, but I think after yesterday's
they were resting it out. They were resting it out, maybe taking a pause, but back in full force. And I think Mr. Blinken trying to fix things in Gaza might also be the next sort of impetus. No great hopes from Mr. Powell for now. So, yeah, the stage set for an interesting morning. You saw that overnight as well. Corporate results is what is boosting the U.S. markets as well. Dow up over 150 points, and it was all about Tesla. Tesla jump-starting the Nasdaq. Let's just pull up the rates of how markets shut overnight in the U.S. You see futures also following some of those cues, and it's largely because of the Tesla stock going up 15%. Now, what's happened is a week or so after Elon decided not to come to India, he landed up in Beijing in this surprise visit, has reportedly managed to convince the Chinese authorities to allow his fully self-driving software to be used there, which means a lot of data sharing, something that the Chinese are not very happy about. He's apparently inked a deal with Baidu. That's what's being reported. That's their sort of Google, so access to maps, etc. And that's a big deal. So India plans, no clarity, but definitely is placing his bet on China. That's caused the stock to jump up. He needed to do something after those terrible results. So that's the story on Tesla. But even in terms of corporate results, 4 out of 5 S&P 500 companies that have put out numbers so far have been above expectations. And that really is what is underlying that mood, even ahead of the Fed meet. So now Fed commentary post the meet on Wednesday is what everyone globally is going to be looking out for. The chances of a rate cut are negligible, actually none, but what is the commentary coming in will be seen. Perhaps more and more this is not the biggest factor anymore as it's being digested that enough of data evidence is required for the Fed to make that move. Treasury yield slipped slightly ahead of it, the 10-year at about 4.61. So no great shakes there. Crude prices were soft as, Blinken is negotiating this deal and hopes of a ceasefire. Representatives from Gaza, from Hamas actually have to agree to that ceasefire now. So that remains to be seen. Asia has opened up in the green. So Asia has largely been positive, and the Bank of Japan hasn't really, come out with any clarification of whether they've jumped in to save the yen, but seems like they perhaps did, and this is, I think, something we're going to be talking about in detail ahead, but huge pullback, isn't it?
From 159 to 154. So there was that invisible hand, and they haven't done this, remember, in over 18 months. So they've intervened after a pretty long
They're not admitting to it yet.
They never do. Central banks will never come out and say that they've supplied the market with any given currency, very much like the Reserve Bank of India. But also worth the mention is that, remember, the Japanese yen is down 11%. For the year so far, and it's interesting because you'd imagine that a Japanese yen or a weaker yen would have an impact on flows, and apparently one reason why you're seeing some money coming into China or Japan losing some money is because China is looking attractive. So those are a few dynamics, but yes, intervention from Bank of Japan, saving the currency from a 35-year low.
Yeah, most likely. Flows over here were completely, meager, I would say, and maybe before a sort of truncated week or a midweek break, no big bets. 692 crores of buys from DIIs. FIs also net buyers after a while, but just about 169 crores. So no great shakes there. But corporate results on top of your mind this morning, Niraj?
You could argue that, but just one quick word on that. It's great to know that it's Japan which is at the losing end for the Chinese uptick and not India, because Chinese markets are seeing turnover, which is quite exceptional. Last week, apparently, a daily record high inflow on the onshore market for China, the largest weekly gain since 2015, and that seems to be continuing. So there is a a sleeping giant out there, which is very on the right side of valuations. And yeah, Dragon actually. And if they get that, platform for real estate, which is what everybody's been, Kaksin apparently mentioned that there's going to be that coming in. And if that gives the stability to real estate, which is the biggest bugbear for China, then a lot of flows, even away from other countries into China, could be a possibility. So look out on the month of May. For that, Chinese inflows as well could be interesting.
But I think, Niraj, and I think just building on your point, and we were discussing this with a couple of FIs as well, it's such a difference from a few years ago. Now, India, China are mutually exclusive. Who would have ever imagined, right? Because it was always a game of chess between these two countries. But the story in India is so different now, and it's all about make for India beyond make in India or made in India. And I think all those positives together is what's keeping it together for us. And even if the FI flows do see an outflow from India, the DIs are making up for it and compensating more than enough.
It won't pinch that much.
It's not. I mean, despite look at April, look at right now, look at where the markets are headed. No, I think this market is on steroids. I think we've just got to accept that.
Yeah. So we've shrugged off that dependence, perhaps, and it's not an either or, except if it's Musk, maybe. now and then is the choice more than anything. Yeah.
Okay, but Tamanna is right. Trade setup. You could argue it is about results simply because you could also argue that it was results that propelled the Bank Nifty higher. Though ICICI Bank was not the only game in town when it comes to the Bank Nifty. SBI was also a large part of the game. HDFC towards the closing hours also a large part of the game. And the strength in Bank Nifty typically augurs very well for headline index movement. So the whole market may not do well. And you saw that evidence yesterday, right? The small cap index was lying as flat as a doormat throughout the trading day. It was essentially the larger names and the Bank Nifty in particular which rallied in trade. Remember, it was also a day wherein while the headline index showed a 1% gain, a clutch of large cap Nifty names also saw a correction, right? Apollo Hospitals, HDFC Life, a clutch of these names had HCL Tech had a pullback in trade yesterday. But this strength in Bank Nifty augurs very well for headline movement. Now, when you look at the Nifty per se, I mean, the Bank Nifty propelled the Nifty higher too. Call writers have shied away from writing any calls at the 22,700 mark or 22,600 or thereabouts. It's all happening at 22,800. And that is the real thing, right? We are at 22,643 on the spot. The calls are being written at 22,800 straight. So no near-term risks being taken by call writers either, because this market has punished option writers meaningfully over the last 10 to 15 days. So that is the other piece. And such market action is very positive for news-based stock movements. And we saw that evidence in trade yesterday. You saw that while the small cap and the mid cap indices were flattish to marginally higher, companies that came out with good announcements got rewarded very significantly. KPIT is not a cheap stock by any stretch of imagination, but the numbers turned out okay. The stock got rewarded by a 6.5% up move in trade yesterday. We saw the large cap Ultratech pull up nearly 3% in the last 1 hour of trade, or 45 minutes of trade. So that's the strength of the market mood staying buoyant, even if the index, which is the small cap index, lying fairly flat. And guys, one sector that stood out for me yesterday was pharmaceuticals. Some significant short covering in trade yesterday. Look at Laurus, Oro, Lupin, a clutch of others. The price movements were not that exaggerated, but the OI change quite significant. 6.5% for Laurus, Aurobindo Pharma 3%, Lupin 2.5%. So certainly, while the result reportage, at least from Laurus, wasn't great at all, but the stock price reaction since the day of the result tells you that the market is not too worried about what happened to pharmaceuticals, select pharmaceuticals in this quarter, maybe looking ahead at what could happen over the course of the next 12 months, particularly in this sector. This, again, Laurus is not a cheap stock, egregiously expensive stock, but the stock price reaction tells you a completely different story.
Yeah, just it's stellar to say the least. And Bank Nifty saw its highest closing level in trade yesterday. It was the biggest gain, intraday gain, that Bank Nifty has witnessed since the 3rd of December 2023. Just to add some more numbers there, FIIs have also actually aggressively reduced some of their short positions in trade yesterday. The long-short ratio has also improved to 57% to 57% on the long side, 43% on the short side. And also in terms of quantum, FIs have reduced their short positions to 45,984 crores versus 99,077, which was seen on Friday. So there's been a pretty sharp shift. Literally, all of this has happened in one day of trade yesterday. And remember, the market started. In fact, Niraj, Tamanna, you guys might want to comment on this. It was quite the day, right? Because we started off very flat. The markets gave traders and bulls enough and more opportunity to make money. And I think that's what makes it exciting. I think about till midday trade, the Nifty was struggling. It wasn't. It was fine.
Towards the last hour and a half.
Yeah, so anybody who was even slightly brave and considered going long would be laughing their way to the bank. And up until yesterday, it was 22,500 that was turning out to be quite the huddle for the street. But now we've closed at 22,600, so it's cheer all over the street, and Bank Nifty's led the way. IT and real estate, though, were large underperformers. I'm not going to say large, relative underperformers as compared to the Nifty itself. But like we've said, it's all about earnings. It's all about Tata Chemicals. It's going to be a very rough start for Tata Chemicals. Remember, they've not had it good for quite some time now. It's been a disappointing quarter again on Tata Chemicals. Their revenues are down a whopping 21% to come in at 3,475 crores versus 4,470 crores. EBITDA is down 54%. Margins now have shrunk substantially. A 914 basis point shrinkage in margins is substantial. It's nearly a 10% downtake in margins to come in at 12.74 versus 21.89. They've also reported a net loss of 841 crores versus a profit of 692 crores. Now, what you want to watch out for is this is because their soda ash and bicarb business is declining. Demand is not seeing an uptick, despite, of course, some hope that they had exhibited in the previous quarter. The UK business is also looking weak. EU is also not seeing a recovery in demand. Now, to break that number down, fourth quarter for FY24 was as rough as the whole year has been. Revenue and EBITDA was impacted because of lower sale of volume and pricing pressure on soda ash. European soda market, remember, continues to remain weak. Like I said, flat glass demand in US is also weak, so there are no signs of recovery coming in for the sector and for the company. Why that number or that loss number looks so significant is because they've done a non-cash write-down of assets to the tune of 963 crores in the UK. This is a one-off. The reason they've done this is because they've impaired some of the cash flow expectations from this unit, and they've done a downward writing on that, and that's why you've seen a big decline in terms, or rather you've seen them post a loss for the quarter. Also, if you take out all the exceptional items, the numbers were not looking good. So they've actually posted, 120 odd crores of top line versus over 180 crores. That was a Bloomberg expectation. So all in all, weak quarter. I'm not sure what brokerage have said. I haven't come across anything just yet. They've talked about raising some funds to the tune of 2,000 crores via bonds, and they've recommended every dividend. But you want to comment on this one, Niraj?
No, just one thing, that whether that impairment is actually an indication of rough times to come, right? Because there is this consistent oversupply within the market that they're operating in it, and therefore maybe FY25 run rates also don't look that great.
If you're doing a write down to that quantum, there has to be concerns going ahead. If they were expecting an uptick, I wouldn't imagine them to even impair it, right?
Yeah.
Would it be tempered by the fact that the entire space is suffering the same?
Yeah, and
it's not necessarily just a Tata Chemicals problem. And
I think EU, US is looking. I think in the case of Tata Chemicals, because the expectation, and they were leaders in the business, right? They've taken it to the chin.
Yeah, and just there was just off the cuff, there is a city note on Adama's results, right, which speak about a read-through for, again, UPL. So chemical, the market doesn't seem to be coming back in a hurry.
But if China does come back, from what we are saying, then I don't know whether this is the start of an end to the trouble for this sector. This was the sunrise sector 5 years ago.
But from 5-6 months, we're talking about, is this the bottom, is this the bottom? So some ways to go, at least as far as Q4
and the stock will unfortunately get punished quite heavily in trade. And even at this stage, those valuations don't look too compelling, right? So despite the outlook being weak, it's not like you're picking these counters up cheap. And I think that is what the markets will do. They'll bring the stock down to a level where it looks attractive, which will potentially coincide with the recovery in the business as well. But for now, that's the counter for you. It's going to be a big loser, so watch out for trade on Tata Chemicals. Going from one bad to one pretty phenomenal, Poonawalla Fincorp, and this is a story that one can see in the numbers itself. They've reported an income rise of 59% at 922 crores. It's a 19% jump Q on Q. Profit after tax is up 84% YOY. Now that is phenomenal. 25% Q on Q. Gross NPAs have also improved to 1.16 versus 1.33 Q on Q. Net NPAs have improved. Margins have also improved, or rather flat, 11.06, which is up about 4 basis points Q on Q. The fact that they've maintained this margin is what we should be taking heart from. And AUMs have grown to 25,000 crores, which have risen by 14% Q on Q. In terms of Vision 2025, they've said out a very ambitious guidance, and the markets will get excited about this. They've said that they're looking to grow their AUM in 2025 by about 35 to 40%. They're expected or have indicated that they're setting out to grow their profit in the range of 30 to 35% and keep the net NPAs in that range of 0.5 to 0.9. So profitable, good growth is what Poonawalla is setting itself up for in financial year 25, and the good numbers of this quarter are only going to help the counter even more. Another smaller one that I want to quickly mention is UCO Bank. This is the last leg of some of those banks reporting numbers. UCO's profits were down 9%. Net interest income was up. NPAs have declined marginally to 3.46 versus 3.85. Numbers were more or less okay. Nothing to get too excited about. It's a smaller one. But because banks has been such a talking point over the last few days, I just thought it was worth mentioning this one too.
Yeah. You know, with UCO, Poonawalla, I would say the entire BFSI space, the big story is the regulatory headwind. You don't know when the regulator is going to strike. Whether it's a MCX, a BSE we saw yesterday, a Kotak Mahindra Bank, the NBFCs, between the RBI and the SEBI, especially for the listed entities. I think that might start weighing down after a bit. But this first talk I'm talking about is from the retail space, and trend numbers came in just a tad before market close. You might have seen some kind of very, very initial reactions coming in. But remember, Zudio and Zudio's growth has been the star of the stories. The Star Bazaar formats have also been doing well. So we'll just quickly see, why Trent is exciting. This net profit big fat figure that you're seeing of 712 crores is also because of exceptional items. So keep that in mind. But, that's 576 crores sort of just coming from those exceptional items. It's a lease agreement change and taxes on it, etc. But having said that, their revenues are above estimates. The margins have grown well, margins at 14.2% versus 9.3%. So revenues and margins and profits have topped estimates. Antique has a note out this morning. They've raised Trent from a hold to a buy with a target price of 4,876. 193 more Zudio stores this financial year will be seen as a positive. Rental costs, of course, have gone up because you're expanding at that stage. But gross margin expansion will definitely be seen as a positive. So a couple of brokerage notes out that are positive on this format, as well as being compared with the D-Mart in its heyday. So keep an eye out on a trend today is what I would say. It didn't have too much of a reaction yesterday. You might see an up move today. Vesuvius India was the other one, a good proxy for the metals in the steel space. And the revenues up 23%. EBITDA looks very, very strong, up 72%. Margins are up nearly 600 bips. And that is sort of a big player. Stock that has moved well as well. So if you pull up the 1 year chart, it's seen quite a bit of movement. Their net profit number also looks very good at 58%. So good numbers. And with all of this excitement about metals, generally speaking, you might see another up move. The stock already up over 157, 158% in the last 12 months. Very quickly, I'll go through the last one on my list right now, NMDC. So they've increased prices of Lampor by 400 rupees per ton, and their fines as well. Sentimentally, you might see a bit of positive there for NMDC. So that's at least first round of some of the stocks on my radar this morning.
Yeah, so a couple of media reports based stocks which could be interesting. So Shriram Finance, everything else, there is reports of a Middle Eastern fund joining Warburg Pincus as a co-investor for investing in the housing finance subsidiary. So that might bring Shriram Finance, or that might keep Shriram Finance in focus in the session today. So do watch out for this one. Do watch out for SBFC Finance as well. Promoters are likely to sell over 5% stake in the price range of 87.5 to 91.65. I'll keenly watch out for this one as well. 5% is not small for a stock which has the liquidity that SBFC does. The lower range of the price band is about 4-5% lower than the current price. So that's one thing that you got to keep an eye out for. RITES has received an LOA from Bangladesh Railway for passenger carriages worth 111 million. So that's to be kept in mind as well. So these 2 or 3 names certainly to be watched out for in the session today. I wonder though, guys, if potentially by virtue of what Grasim has, what Ultratech has done, and the kind of reactions and brokerage notes that have come in today, could Grasim actually see some bit of an uptick in the session today? Because Ultratech had a fabulous 3% up move. Most brokerages are constructive. Maybe Grasim sees a bit of an uptick today.
Yeah, Grasim seems to be benefiting from
multiple
things. Vodafone's FPO works out okay, Grasim benefits. So maybe more on that up move as far as they're concerned. Just one more I want to talk about was Birlasoft. We haven't mentioned it yet, but the Q4 results are a bit of a hit and a miss, a bit of both. So a miss on revenues, but margins and profits were a beat. So look out for that, and we'll be speaking in more detail to the management also later in the day. The revenues grew about 1.6% Q on Q, so that was a miss on estimates. Birlasoft may not have such a great opening today. RVNL was the other one. Now, at some point a few months ago, these stocks were a fad, completely doing very well. Quiet on that front right now, but I thought this piece of news was interesting because there's an LOA that the JV of RVNL and KRDCL has got. So their JV basically has got a contract of 439 crores. They will redevelop the Thiruvananthapuram station. And remember, these are the kind of companies which will see a lot of work coming in once the election dust settles and the results come in post June 4th. So that could be an interesting one to spot today as well.
Yeah, if they needed an excuse to rally again this morning, you've just given them one. Just a couple of names. KEC, this is not on back of any earnings, but they bagged a pretty big order to the tune of about 1,036 crores. Definitely worth the mention because stocks like these run up quite substantially in order wins, and KEC is known for doing stuff like that. So watch out for this one. It could see a good move in trade on back of winning this order. Along with that, there is a new listing. It's been a few days since we've had one. J&K India, which is a heating equipment manufacturer, will be debuting on the exchanges today. The final issue price for this one has been set at 415 rupees a share. So if you're an investor, you want to watch out for that listing later on in the day. A quick update on the F&O ban list. Vodafone Idea member has been on that F&O ban list, but there has been an addition from this morning, and it's going to be Biocon. So those are a few updates that I had, but largely speaking, implied Nifty is indicating to a marginally higher start. Remember, volumes in Japan are low on back of the golden trading week, but there'll be enough and more cues locally as well that the street will be eyeing, guys.
Yeah, most certainly. Okay, so that's the long list of stocks, but there is also a decent enough debate that we're trying to put up today, Alex, on the Editor's Cut, aren't we?
Absolutely. In fact, there are a few sayings in the market, and this one's quite popular. Whether or not it has panned out is another question, but sell in May and go away is an adage that is quite familiar to a lot of people that have been in the markets for long enough. And this is something that I would like the two individuals that are joining me today to debate, because I've seen a very interesting set of arguments on both sides, and I would, am I right in saying that, Niraj, you're saying this may not come to pass, and It's the other way around. It's the other way around. Samina is saying that this may not come to pass. It may be positive.
We're just discussing it.
No.
We're not taking sides.
It has to be a pro and against. So one of you have to take a pro and one of you have to take an against.
You are going pro?
No, you're going pro.
No. So actually, the way we are trying to do this is I'm talking a lot more about what global factors might be doing.
So fair enough.
Samina is pointing
what it's going to be is
well.
sell in May and go away does not happen this time, is what Samina is saying. And what you're saying is that
my argument is just that it may not work this time around as well on the global side. Even if Samina is saying that it will work, it will not work on the local. I'll put the reasons why.
We'll let you decide. How about that? You decide the conclusion of this conversation.
Okay, fine. Let's make it quick.
But just a couple of things, and of course we'll talk about all the good things which Niraj will bring in. But if I was looking at F&O data as we go into a brand new series this May, a couple of factors that did stand out. Now remember, these are just data points which may or may not stand as we go into the month, but definitely worth a mention. One of them is April rollovers, which have been fairly healthy. Actually didn't see, were lower than what we saw in the previous month and versus what we've seen in the last 3 months. So for example, your April rollover number was 65.12 versus nearly 70% in March versus 72% in the month of Jan. So what I'm trying to say is that bulls were not feeling as aggressive at the start of the May series. Along with that, markets are bracing for some volatility. Remember, you've got these big events that are lined up, of course, local elections being the biggest one for us. Rollover cost also were much lower. So not much lower, but they were definitely more than half the rollover cost that we've historically seen at 0.3% versus a 3-month average of 0.72. Apart from that, the long-short ratio of FIs, which with a disclaimer looked very different yesterday, but at the start of the month the bias was on the short side. So traders, FIs were a little more cautious.
At the start of April, you mean?
At the start of May. We're at the start of May, right?
Yeah, but you're saying you're saying
so
now.
as we go into May, at the end of the April series we were seeing the long-short ratio biased towards the short side. So all that made it seem like May could be a difficult month. You've also got a whole bunch of events. So you've got your elections, you've got the US Federal Reserve FOMC meet, you've got some of those quarter earnings. Geopolitical, while on the back burner yet, is tough to call, right? I mean, it's almost impossible to decide who decides to go after whom, what comes out of this. And of course, it's the China factor, which the sleeping dragon has woken up. But whether or not that's going to cause problems for us is anybody's guess. But historically, and this is what Niraj is going to also agree with me on, every election May has actually been phenomenal for the markets.
I mean, you don't need me to agree.
Data
needs to agree with you.
And actually, to add to that, which we'll substantiate, we saw this yesterday where Bank Nifty took the lead. And again, historically, in an election year, Bank Nifty does better than the index.
Okay, so those are primarily
so I am on the fence. I'm just going to make this clear. I'm on the fence.
Okay. That's the easy one. I can say I'm on the fence too.
No, you're biased. So you're positive
guys,
bias.
This is an old saying, sell and may and go away. Another very old saying is that the hottest place in hell is reserved for those who sit in the fence.
Thanks, Alex, just in case.
Since I'm going to
I'm just telling you.
I'll take a stance. Okay, so the question only is that, whether sell in May and go away works or no. Now, typically, as has been seen on the global markets at least, this usually happens when there is a very good rally or a very strong rally ahead of May. Global markets, US markets in particular. And this time around, it hasn't quite happened. So, in some sense, it's not been a red hot rally. Usually that used to be the case when, and then the markets used to come off. So what are the known devils, right? Expectations of a rate cut have been pushed out, but it's a known devil because this is, let's first talk of the possible, these are not the possible market triggers. These are the known devils. So I think we've got the caption wrong. But the point is these are the known devils, that expectations of a rate cuts postpone and reduce. That's part one. The strength of the US economy is resulting in higher yields. Higher yields is a known devil. Everybody knows that this is the case, right? The benchmark US oil futures have risen by over 15 to 20%. A known devil. We know that is happening, right? And that's around us. And the threat of China invading Taiwan, widening Middle East war, and more geopolitical conflicts, known devils. So, viewers, excuse me again, these are not possible market triggers. These are the known devils that the market has had to contend with and know about it.
Right.
Now, the possible good news are these, which are coming up now. The sticky part of the US inflation, as per some people, including Ed Yardeni, is not very high. And at some point of time, will surprise with the
downside
that will come.
Right.
So that is one possible positive.
Tailwind.
Yeah, tailwind, positive, whatever you call it. There is strength in the US corporate earnings thus far, which is actually auguring very well for future valuations.
80% of the S&P 500, so far at least?
Yes, and it's come out well. Yeah. And therefore, one argues that if those earnings stay steady and we move out 3-4 months into this year, then the markets start looking at 2025 earnings instead of 2024. They follow the calendar year, viewers, so keep that in mind. So that's the other part. The higher oil prices is already getting a lot of shale oil things to start coming in again to the fore, right? It was dormant, it's starting to come up. Does that help in the eventuality of oil prices staying higher? Point number 3. Point number 4, the US market multiples, as I said, 20 times, but steadily might get discounted. So in some sense, the devils are known. The unknowns have a positive tinge to it if we don't see a proliferation of geopolitical.
My only point, Niraj, is that while this is all known, this also makes the margin of safety very low, right? If everything is
any surprise event,
so yeah, could be viewed very negatively. And also, while we may see a pretty fantastic May, which is what I mean, after yesterday, I think anyone who was doubting that, including me, is now taking a step back, thinking, this is actually looking like a very solid setup. What happens after May? While we may not have a price correction, there may be a very long drawn time correction that we'll have to suffer, because at the end of the day, even if it is a multi-year bull run, not just for India, we've seen that in Japan, we're seeing it in the US, Europe is coming out of the woods, and so is China.
So, I mean, and that's anyone's guess. What we could do, though, is, so we figure out whether or not...
Go long on the Nifty.
Go long on the Nifty, maybe. Okay, that could be something that you could interpret. But we'll revisit it at the end of May to see if sell and May go away actually panned out and what the path forward would be, because we'll have the elections results to talk about as well.
Oh wow, that's going to be a volatile.
I just have one line here, and which is that post-May, Samina was talking about, well, if Prabhudas Leeladhar is to be believed, the Nifty is hitting 25,800. So...
No, and I think I spoke to Harold yesterday. He said double-digit returns in FY25, and I'm thinking double-digit for another year.
After FY24, that's phenomenal. All right, so viewers, let me know what you think about what we had as a conversation today. Do you actually think that sell in May and go away will pan out this time around? Let us know. In the meanwhile, stay tuned. There's lots more coming up on the other side, starting with a conversation about the F&O queues heading into trade today.
Welcome back. You're watching India Market Open. Implied Nifty is indicating to a flat to slightly higher start this morning. But remember, the bulls have been sprinting through the large street, and we saw that in trade yesterday. The Nifty, GIFT Nifty's implied Nifty is indicating to a marginal gap up start. But yesterday's close was worth talking about. The Nifty closed with a gain of about 1%, but above significant levels such as 22,600. That's the Nifty futures, which is up about 107 points, trading at a premium. Open interest also seeing a marginal increase, clearly indicating that the bulls are now turning a little more aggressive and brave in terms of initiating long positions. Bank Nifty was the star performer yesterday. It was the highest closing level on Bank Nifty, biggest gain since seen on Bank Nifty since the 3rd of April, led by counters like ICICI Bank. That's a pretty strong premium on Bank Nifty futures of 125 points, and that's the kind of open interest you're seeing in terms of Bank Nifty, 24.5%. Very, very clear that the bulls now will be taking charge, and Bank Nifty could be leading from the front. Well, a quick check on how the spread is looking this morning. Remember, 23,000 has been a very important level of support, and we've seen maximum call OI all through the April series as well around those levels. But this morning, the kind of picture that's playing out here is pretty significant. We've suddenly moved from resistance levels of 22,700, 800 to maximum call OI seen at 23,000. That will be an important level that the street will be tracking, and an important level of resistance for us as well. Followed by, of course, 23,200 that has sprung out of nowhere. So this was a trade that was not seeing a lot of traction, but enough and more writing has taken place around levels above 23,000. You've also got 22,800 that will act as the first level of resistance today in terms of trade. Once that level gets conclusively taken out, the action will move to the upper band of the street. In terms of support, 22,000 has been a key level of support for the street all through the month of April. What did change after yesterday's up move is that the traction now, the put side of things, did see a maximum OI at levels of 22,500. That becomes an important immediate support for the street, followed by 22,400 and then 22,300. So in terms of a trading range, what we are seeing is that on the upside, the markets will face resistance around 22,800. On the downside, 22,500 becomes fairly critical in terms of support, followed by 22,400. That's what it looks like. It's going to be a morning where the markets will be reacting to some earnings as well. You've also got a few stocks in an F&O band, so counters like Biocon, Vodafone Idea are in the F&O band. But we have with us a guest who's now joining us. Ajit Rambia joins in with his F&O strategies. Ajit, let's start with the Nifty first. Up until yesterday, it was 22,500 that was turning out to be quite the hurdle for the bulls on the street. Beautifully got taken out in the second half of trade, and now what we've seen is maximum put OI is at 22,500. So what was resistance is now turned as clear support for the street. What is the trading strategy for the May series?
Yeah, good morning. Thanks for having me on the show. So we have had a huge short covering rally in banks yesterday. Bank Nifty has crossed its all-time high, and it seems it is poised to cross the landmark of 50,000 in very short time. Nifty is also hovering around its all-time high, and it seems it will touch 23,000 very soon. After very good results from Axis Bank and ICICI banks, the market have rewarded handsomely with indices soaring to new highs. In Nifty, the monthly close of 22,570, the monthly close, the expiry close, will act as a good support, and the all-time high of 22,775 can act as a good resistance level, to be precise. In Bank Nifty, the monthly close, the expiry close of 48,200 will act as a good support, and it is in a free zone above this. Just a caution, remain hedged in your positions as major events are lined up.
Right. How would you then approach a trading strategy on Bank Nifty? If it is a short covering led rally, you had the likes of ICICI Bank do well. Counters like Kotak and HDFC haven't even participated, right? Do you feel like while I do take your point, you've got to tread with caution because you've got big events lined up. Would you consider a long strategy on Bank Nifty for the month of May?
Sure, we do that. We buy Bank Nifty futures and hedge ourselves by buying 48,200 puts. So the support level is being hedged by buying the futures.
Long trade coming in on Bank Nifty. I want to pick up on Exide, Ajit. You've got a bullish call coming on Exide Industries. Just a quick mention for our viewers, Exide also reports its earnings today. What is the strategy on Exide? How would you like to trade it?
Yeah, the counter is showing good upside potential. Our view is bullish here. We can initiate a bullish strategy where we buy one Excite May futures. The last price was 458. We sell one Excite May 500 call. 500 is our target price at 12 rupees 50 paise. And we hedge ourselves by buying one Excite May 430 put at 13 rupees. So at our support price, we have our hedge place and targets are also placed well.
You know, IEX has seen some pressure in yesterday's day of trade. It was down about 2.5%, but over the last few days, it's also trading largely flat. The month has been good. It's up 11%. Are you expecting further price increase in IEX?
Yes, we see a very good pattern in IEX. We are very bullish on this counter, very bullish. Like a long term, it's going to give you substantial gains. For the short term, our view stays bullish on this counter. So we initiate a bull call spread where we buy one IEX May 157 half call at 7 rupees 30 paise and sell one IEX May 175 call at 2 rupees 45 paise. So a mere investment of 4 rupees 85 paise can fetch a profit of around 17 rupees 50 paise for this expiry.
Right. Thank you very much, Ajit. Great having you on the show. That's the view coming in the markets. The trend is biased towards the positive, but tread with caution is the advice. So hedge your bets, even if you are, Ajit, like he recommended, a long trade on Bank Nifty, a bullish strategy on Excite, which will report earnings today, and of course IEX as well as a bull call spread. So that's from Ajit. Thank you, Ajit, for joining us. But it's back to you guys, Tamanna and Niraj.
Yeah. You know, the focus on Nestle also this morning. The numbers out a couple of days ago and relatively better than some of its peers. Maggi has been its big winner this quarter, and I had an opportunity to speak with the Nestle CMD Suresh Narayanan yesterday about a host of things, including their financials. One important takeaway, they are not planning to pass on the hikes in cocoa and coffee prices yet, at least not in Q1, and then of course it's a wait and watch. But the interesting bit that I'm playing out is when I ask him about the whole controversy about sugar levels and the content and quantum of sugar in baby food in India versus other countries, especially European countries. Listen in to what he said.
In the context of India, the FSSAI, which looks at not just Indian conditions but also looks at Codex standards. So please don't ever think that our regulator is in isolation. They're looking at global standards as well. They have got a ruling that says that sucrose can be added if it meets up to 20% of the carbohydrate requirement of the feed. Now that translates into something like 13.6 grams per 100 grams of feed. The Nestle product has got 7.1, so it's got less than 50% or just about 50% of the amount of sugar.
Does it have more than other nations?
Does
it have more than, say, what is sold in Germany?
Well, each country has their own. There are parts of the world that have got more as well and less as well. So it all depends on that's why I explained to you the nutrition content delivery of the product is as important as what goes into it. So if my feed was giving less than what is given by a comparable feed in Europe, then you can say that you are shortchanging the children in India. That's not the case.
Okay.
That's not the case. So therefore, I think, and even added sugar, in the last 5 years, we have made an improvement of 30%. And the journey still continues to reduce it even further as we go forward.
Okay, you can watch that entire interview, of course, on NDTV Profits YouTube, Instagram, Facebook, Twitter, all of our social media platforms. Let's get to what the morning looks like. Rajat Bose, SEBI registered research analyst, with us on the show this morning. Sunny Agarwal also joins in. He's head of fundamental equity research at SBI Cap Securities. Welcome to both of you. Always great to have you here on NDTV Profit and on the India Market Open. Mr. Bose, let me begin with your take. Bank Nifty. I'm going to start with Bank Nifty after the sort of, I think, one-way move and astonishing climb that it had yesterday. What is your outlook on the Bank Nifty and the Nifty as well?
Well, Bank Nifty yesterday did a very good job, 2.5% upswing, and that is a breakout. And it has actually posted a new high. Now, from here, you should expect first 49,500 to about 49,700. This is a projected resistance level because the index is on an all-time high. And once 49,700 is cleared, then you can expect the 50,000 mark to be scaled by Bank Nifty. As of now, Bank Nifty looks pretty bullish. And especially apart from the PSU banks and SBI, ICICI and Axis is also, they are also actively supporting the movement in the Bank Nifty. So Bank Nifty is likely to remain bullish.
All right. And what about your top picks this morning, Rajat?
Well, I have actually chosen two petroleum companies. I mean, Hindustan Petroleum and Indian Oil Corporation. I start with Indian Oil Corporation. I would put a stop loss at 170. Targets will be 183, 189, and 193. Indian Oil touched a high around, say, 193, and thereafter, that was 8th of February, and thereafter, in the middle of March, it went down to about 153. It's a 20% correction, and after that, it is gradually moving up, and now, after getting out of a consolidation zone yesterday, it has given a breakout. So I'm pretty bullish about it. Hindustan Petroleum, similar kind of story. Here, I would put a stop loss of 488 on closing price basis, and targets will be 515, 528, and 545. Similar kind of chart patterns, similar kind of breakouts, and so both these two are likely to do well in my view.
Well, also IOC reports its earnings today, so it'll be interesting to see how this one does. But a long trade call coming in from Rajat on IOC. Sunny, you want to comment on that one while we're talking about IOC? Some of these OMCs will be in focus once again. Crude has taken a bit of a breather, but with IOC, of course, it's going to be about earnings. Do you have a call on IOC at all? Do you track this one?
Yeah, good morning. And what I believe is that, we all know that it's a contra play on crude oil prices, and with a little bit breather in the crude oil prices, definitely it augurs well sentimentally, at least for all the oil marketing companies. But what I believe is that ultimately the price hike which has been curtailed since the code of conduct has been in place, I think although the March quarter numbers will be a healthy set of numbers, but it is ultimately the impact of impact of the lower margins will be seen in the June quarter. And mind you, the gross refining margin, the Singapore GRM, which we called as a collapse and is trading close to $4 per barrel. Though the impact on both marketing side as well as refining side will be visible in the June quarter. And to that extent, I would like to maintain a neutral stance on all the oil marketing company at the current juncture.
Okay. Sunny, good morning. Yesterday, one of the key numbers that really made a mark was Ultratech. Strong delivery, brokerages today are fairly upbeat. How did you read into those numbers? And is there a possible read-through out there because of Ultratech's performance, because of Vodafone FPO, etc., for Grasim as a stock?
Yeah, good morning, Niraj. I think a pretty strong set of number by Ultratech, especially post a weak commentary by Dalmia Bharat. So I think one of the big lever for Ultratech is basically reduction in the coal cost. So they are sitting on a high cost contract for coal, which is likely to get over by the December 24. So it is the fourth quarter of the fiscal year 25 where they will see benefit of lower coal cost. And on the top of that, with the increasing share of renewable energy as a part of total power cost, ultimately their power cost is something which will come down in FY25. On the demand and pricing side, I think management has given a bullish commentary as far as demand environment is concerned. However, pricing is likely to remain kind of flattish for FY25. That's the word that is coming from the management also. So I think, with the recent acquisition of Kesoram, I think Ultratech is heading towards kind of 200 million ton plus capacity by FY27. So we continue to remain bullish on Ultratech from a medium to long term perspective. And as far as Vodafone is concerned, obviously with the survival issue behind us, for at least for Aditya Birla Group on Vodafone front, I think that will have a rub-off effect, a positive rub-off effect on all the other Aditya Birla Group companies, and especially Grasim, which is a holding company for Ultratech.
Okay, Rajat, come in on this one. A sharp up move in Ultratech yesterday in the last 45 minutes led by results. Brokerage targets are much higher. I just want to understand, how do you think about this one, and also coupled with that, Grasim?
Well, first, Ultratech, regarding Ultratech, what I would like to say is that Ultratech yesterday had definitely crossed the 9-day and 20-day exponential moving average. In fact, it started its journey from those levels of the moving averages around, say, 9690. And now it needs to decisively take out 10,000 to about 10,300 mark. If that happens, then you can expect a new high that would be above 10,500, and it can even go further up. And it has gone through a consolidation for several months. I would say at least 4 months of consolidation has already happened. So Ultratech looks pretty good. One can buy at current levels also. And regarding Grasim, what I would say is that Grasim is already on a good bull run. In fact, it is hardly ever falls below the 9-day exponential moving average. Whenever it tests that, it bounces back. And yesterday, it also posted an all-time high. Now, the next target would be 2420 and then 2450. These are the two targets that one should look at. If 2450 is taken out, then you can expect a sharp upsurge.
That took it to the chin yesterday, very unexpectedly, was BSE. A 13% lower close is what we had. Sunny, first come in fundamentally on BSE for me. What did you make of that increase in fee? The markets didn't like it. Brokerages, the ones that I looked at, were not too concerned about it, but traders and investors dumped BSE. Do you feel like today could be a day where, the fundamentals will take over and you may see some buying emerging and it makes a good value buy at these levels?
Yeah, definitely. I think if we take into consideration the long-term perspective, I think it's a long runway for BSE right now. BSE, in terms of F&O market share, is close to around 8 to 10%. And still there is a lot of scope to gain market share basis launch of new products. So we have seen expiry of the BSE F&O contract shifting away from Thursday and Wednesday to Monday, and that is giving a lot of heads up in terms of volume for BSE contract. And on the top of that, I think the pricing still is below the 40% as compared to the NSE in terms of charges. So I think there are many levers for BSE to recoup the extra pay which they have to do on to the SEBI as far as the regulatory charges are concerned. So I think maybe today stock will stabilize and long-term investor will definitely like to enter at a lower levels. So I think it's a good bet if somebody has got a medium to long-term view. Purely basis that F&O market share is something where BSE will keep on marching ahead as compared to the NSE.
Rajat, I know this is more of a short-term intraday sort of call, but a couple of stocks that were quite weak yesterday. BSE, HCL Tech and Apollo Hospitals. Would you bet on a bounce back in today's day of trade? No significant gains, no trend reversals. Just a dead cat bounce maybe on a stock like BSE, HCL and Apollo.
Well, first, I'm answering your query on BSE. You said BSE, right?
Rajat.
You said BSE, right?
I did.
Okay. BSE was about to give a breakout on the upside above 3250, but then came this SEBI new decision, and after that it went a gap down, but it is yesterday's move has been encapsulated between, say, 20-day exponential moving average and the 50-day moving average. 50-day was at, it is currently now around, say, 2597, and whereas the 20 days between say 28.66. Now it needs to take out 28.75, 2900 range. If it does, then only you can expect some kind of an upsurge. But the pattern of yesterday's trading suggests that not all is lost for BSE. In fact, there is every probability that it can bounce on the other side, on the upper side. And what was the next talk?
HCL Tech and Apollo Hospitals.
HCL Tech is a problematic. It's pretty much problematic in the sense that it has gapped down, then it fell below the 200-day exponential moving average. Throughout the day, more or less, it stayed below that, and there is only thing that is going in favor of HCL Tech is that record volume. Generally, after a record volume, you see some kind of a bounce back because most of the bears or most of the people who wanted to sell would have sold. And now it could be a culmination move. And once it takes out the 200-day moving average around, say, it is around, say, 1415. If 1415 is decisively taken out and, say, it closes above 1425, then you can expect a good bounce back on this.
By the way,
Apollo Hospital, the third stock, is also looking pretty weak. It can go further down. Apollo Hospital needs to be... you need to wait for some time and see how things pan out here.
Okay, well, we'll watch out for these stocks. We'll watch out for Linde India as well, by the way. I haven't discussed that, but remember, NSE's directed it to do some valuation studies and some related party transactions. Maybe Linde India corrects in trade. We'll talk about this after this very short break. We'll be right back with the pre-open session. Also have a special conversation coming up.
Right, just a couple of minutes, less than a minute and a half actually, for the pre-open session to begin. And by all sights, it's expected to be an up move, at least on start. Now, the focus really this morning should be, what do you do with the banking back? Private banks roared back. The PSU Bank Index was also doing very, very well in close yesterday. And of course, Bank Nifty was the story and the star of the day. Let me start with Sunny on his take on an ICICI Bank right now. Sunny, I'd like you to also comment, say, on a UCO Bank. UCO Bank numbers are out and on the face of it, a little dismal. Now, on these two stocks, what would be your specific take? And then, of course, we'll come to your overview on the banking pack.
Yeah, I think ICICI Bank has reported a very fabulous set of numbers. In fact, I think clearly leadership seems to be shifting away from HDFC, likes of HDFC Bank towards the ICICI Bank. And recently we have seen the bank scaling up lifetime high market cap, also 8 lakh crore kind of market cap, 8 trillion rupees. I think in fact, outlook is also pretty robust as far as ICICI Bank is concerned. And we continue to remain bullish on ICICI Bank, with wherein the fair value for the bank is close to 1350 rupees with investment horizon of 12 to 18 months. Coming to UCO Bank, Tamanna, so I couldn't go through the UCO Bank number. If you can just share a overall brief overview on the numbers.
So that's the story as far as ICICI Bank and UCO is concerned. But let's quickly address pre-open rates, and we'll wait for them to settle a bit. But the first couple of seconds seems fairly positive. Now, Tata Chemicals is the other stock that we should talk about. And Rajat, let me come to you on this. The numbers look disappointing. Perhaps we'll see a bit of a downtick there on Tata Chemicals. We'll get those rates up for you as and when they're available. Is that now something that you would exit at this point? Do you see any potential on its charts?
Well, Tata Chemicals, I would say exit would be a little too early if you do it right now, because Tata Chemicals tend to take support around, say, 1080 to about 1060. Unless this zone is taken out decisively, I suppose it would be a bit premature to get out of it. But if it were to fall below 1060, then definitely one should seek an exit.
Quick check on a couple of those other names. BSC, if I can get that one up and see what it's getting up to in pre-open trade. The Nifty is looking very good. And if this is anything to go by, you're looking at a 22,700 plus start on the index. And that, again, will take out a whole lot of bears that have, of course, trades around those in that range. Well, BSC also indicating to a gap up in trade. Tata Chemicals, Poonawalla FinCorp. Let's pull up Poonawalla. That should be a stock you want to track this morning. Very solid numbers. There you go. 6.5% up move coming in on Poonawalla FinCorp in pre-open trade. UCO Bank was the other one that reported. KEC had a big order win. So you have lots of counters. UCO Bank numbers were not too bad, but the stock is down. KEC, like I said, usually reacts to order wins. 6% up move on KEC is what we are anticipating. Sunny, actually, no, let me come to you, Rajat, because technically there are a few counters that we're picking up on. Supreme Industries saw its biggest up move in a single day since 2009 yesterday. What does that look like on the charts? And Zomato, 194 on Zomato. The run-up came out of nowhere in yesterday's trade as well. So Zomato and Supreme Industries on the charts this morning.
Supreme Industries yesterday, it's a major range breakout, because since last August, it has not gone beyond 47.50 decisively. It used to come down from those levels. But yesterday, with good volume, I would not say excellent volume, it has closed above 49.50, and now 5,000 is definitely within reach, and since it is a range breakout, the projection comes to around, say, 5,500. So Supreme Industries definitely looks good. And the next stock that you asked?
Right. We'll come back to that in a bit, but just another interesting story this morning. Mahindra has launched the XUV 3XO, which they say is the new disruptor in compact SUVs. We caught up, NDTV's Mugdha Mishra caught up with Rajesh Jejurikar, the CEO at Mahindra Auto, at the launch today. Listen in on how they plan to disrupt that market.
pricing is a very important part of helping to create category disruption. And we've created a starting entry price of 7.49 lakhs because we believe that there are many customers who want the right SUV as an entry level to move up from either hatch or make it their first product. So this MX1, as we call it, is to enable that. As we move to the next level of opportunity to create a market, we believe that a gasoline automatic at a price less than 10 lakhs is again an opportunity to create a segment. There are many customers who want to buy an automatic, but it's not affordable. So 9.99 lakh, we said, should be a price at which customers should be able to afford a really good product with an automatic transmission.
All right, so the reason why this, compact SUV segment becomes important, we'll just pull up a Mahindra and Mahindra as well. The auto space has been a bit quiet, but you're going to have numbers out in a couple of days for the month of April, at the start of the new month, of course. And with M&M, they really had to sort of fill this gap in their compact SUV segments. I'll just get a quick view from Sunny on an M&M and versus, say, a Maruti.
Yeah, Tamanna, so I think M&M has been doing pretty well in terms of volume growth as far as passenger vehicle or SUV segment is concerned. So as we have seen post-December quarter, the company was sitting on close to 2.4 lakh kind of order book number. And at the same time, they have alluded to the fact that they are going to increase the capacity for the March quarter. So I think both this will be a very good trigger as far as earnings for SUV or passenger vehicle segment is concerned. And definitely the launch of this mid-size SUV segment definitely fills the gap for M&M as a product portfolio, and let's see what is the traction pre-booking number. So we continue to remain bullish on M&M, especially in the light that monsoon forecast is normal, so which will kickstart from June. So even tractor business is likely to report a decent set of volume growth for FY25. So compared to Maruti, M&M is relatively trading at a cheaper valuation, and we continue to remain bullish on M&M. For Maruti, what we believe is that next trigger will be predominantly reduction in taxes on hybrid vehicles. So that is where the Maruti is dominant as far as industry market share is concerned. In case there is some cut in taxes on hybrid vehicle post-election, then that will be additional kicker as far as Maruti volume growth is concerned. So at a current juncture, M&M is relatively better placed as compared to Maruti.
Right. Quick check on a couple of other companies that would be reporting earnings. So you've got the likes of Havells, Indus Towers that will post numbers, Exide Industries. So it's going to be, Havells is down 10%. This is before it even reports numbers. Exide is trading flat. I'm not sure what's happening to Havells. Sunny, what is the expectation in Havells? Do you have a view? The stock is looking a lot more realistic, but a 3.5% cut on Havells. Pull up REC as well. They should be reporting too later on in the day. It's had an interesting journey. Went all the way up to 500 and then consolidated for an extended period in that 420 to 440 range. But the last 5-6 days have been good for REC. Birlasoft numbers may not look too great. We will be connecting with the management shortly, but in pre-open, the stock is up 2.5%. You want to comment on this one, Sunny? What is the expectation from Havells, which reports later in the day, REC, and Havells and REC, two on my watch list.
Yeah, definitely. I think looking at IREDA number, I think REC should also continue to report a healthy set of number for the March quarter. And anyway, the tailwind for the industry is pretty strong as far as renewable energy is concerned. Even in terms of valuation, I think on a relative basis, REC is trading at a cheaper valuation as compared to IREDA. So we are expecting, so I don't have number right now in front of me. If you want the exact number, just give me a moment. I will pull that number. And again, on Havells front, I think we will see a sequential improvement, especially on air conditioning portfolio, Lloyd portfolio. So we have seen that portfolio doing well across the industry. And for Havells also, I think that should be one of the growth driver for this March quarter.
Also, Sunny, you want to give us your picks? We should highlight, you've got 2 buy calls, I believe.
Yeah, so I would like to, one of my pick will be on ethanol side. That's the Praj Industries. So we all remember that, we all know that post a ban by government on direct conversion of sugarcane juice to ethanol ahead of election. I think now with the election event, which is likely to get over in the next 1.5 months, I think again the focus of the government will shift back to increasing the blending ratio from current 12% to 20%, and sitting on a pretty robust order book, close to 4,000 crore order book as far as Praj is concerned, offer one times sales visibility, and we are bullish on the stock from a medium to long term perspective with a price target of 650. And my second pick again will be from basically cap goods and engineering side, and that is Engineers India. So again, we have seen a very sharp recovery as far as financial performance of Engineers India is concerned during the 9-month FY25, and with a robust order book of close to 8,200 crore, I think the company is well placed to deliver a healthy earning growth in FY25 also. And again, a proxy play on ongoing capex by all the oil majors, whether it is the upstream or downstream companies. I think trading at a reasonable valuation. And again, we have chosen a PSU company ahead of election outcome. So we believe when the election process is over, post that we may again see an increase in order inflow for all these order book driven public sector companies. So looking into that, we are bullish on the company from a medium to long term perspective.
Yeah, I'll definitely in that list as well. I quickly want to mark Vesuvius before we go for our top brokerage picks this morning. Look at that stock, 9% up, good numbers, proxy for the steel industry. Healthy margin increase as well. Not so much for a Tata Chemicals, which is one of your top losers, at least in the pre-open session. We'll see what happens when markets open. Varsha tells us why. Varsha, what are brokerages saying on Tata Chemicals this morning?
Well, thank you, Tamanna, for that. So we've seen that a company has reported net loss on the back of lower volume of soda ash and pricing pressure across all the regions, and also one-time charge incurred in its UK operation. Now, Kotak Institutional Equities has maintained sell on Tata Chemicals with target price of rupees 770, which is a 30% downside. Now, according to Kotak, softness in soda ash volume and pressure on realization, which has more than offset the higher sales volumes of salt. Also, earnings is expected to stay near current run rates in FY25, led by continued oversupply. The main reason is that US and UK domestic volumes have already contracted versus export volumes have contracted, and US export volumes have contracted more than 80% for H1 FY25, and US alone accounts for more than 60% of Tata Chemicals global soda ash volumes. Also, the world soda ash prices have bottomed out according to management, but there are no signs of a meaningful recovery. Now, Europe seems to have problems where management is hopeful for production capacities to get rationalized in Europe, helping reduce oversupply. Kotak also remain concerned about capacity expansion in Beirun Group in China and CCCam in US. Now, the brokers have cut FY25-26 earnings by further 12 to 20%. Now, this is largely driven by US operations, which reported EBITDA per ton of $28 for fourth quarter, and Kotak has now cut EBITDA per ton for FY25 from $45 to $35, and thereby assuming recovery to $40 in FY26. And lastly, if you see the hopes around a large capacity expansion into battery chemicals seem misplaced. So this is the reason that they've maintained sell for Tata Chemicals.
I want to just quickly mention Birlasoft and Trent. Trent as well, if you can pull that one up. They reported decent numbers, EBITDA growth. The stock had hit a fresh record. Interesting what happens on Trent today. You've also got Birlasoft you want to watch out for. And Indigo, there's an analyst meet later on in the day. The stock hit a 52-week high and it trades flat this morning. Banks will be in focus again. It'll be good to see what ICICI Bank gets up to as well in trade. So all in all, Kotak, ICICI Bank is trading flat, so don't expect too much of a movement on that. Well, apart from that, Supreme Industries, that was the other mover that we saw in trade yesterday. And you've also got a couple of these pharma names that Niraj had alluded to in the morning. Rajat, anything in the pharma pack? A couple of those names, like Loris, also had a pretty good run. DVs included. Any sort of breakouts or directional move that you picked up on pharma names on the long side?
Well, Divi's is giving some kind of a directional move, but the way it closed yesterday means that around 4,000 there is a lot of supply. That's why it has come down. And this has the best potential because there is an impending inverted head and shoulder formation that was developing. Now it has become a complex inverted head and shoulder. So, but it needs to take out 4,000 levels in order to move further up. One should keep an eye on it because it is trying to cross this range with a lot of volume backing earlier. Disclosure has it that I personally hold some shares of Divi's Labs in my portfolio.
Just a couple of stocks moving on news this morning. Gillette, because of their numbers, they actually came out with Q3 numbers, fairly decent. So they've closed fine, 3% up pre-market. RITES is the other one I wanted to talk about. Order from Bangladesh Railway, 928 crore order. Let's pull up RVNL as well. It was on our watch list. Their JV will be redeveloping Thiruvananthapuram railway station, and that stock is 1% up. So quite a few of these, that are on the radar. But we'll go to the opening rates before we get inputs from all of our analysts.
Yeah, most certainly, Tamanna, and about 20 seconds left. The key would be whether the Bank Nifty can expect some bit of a follow-through after the mammoth move that it had yesterday. And nobody expects an encore of what happened to the Bank Nifty yesterday, particularly because of ICICI Bank's move and maybe SBI. But let's see if there is a bit of a follow-through to yesterday's strong up move. Here are the first trades this Tuesday morning before the holiday tomorrow. It's flat. Is the Bank Nifty reacting? It's flat. Well, it could be a day of consolidation. Let's see. Mid caps and small caps, which are lying dormant yesterday, especially the small cap index. Mid cap index is 1/3%. Small caps are actually participating today, 0.5%. So not bad. From an individual portfolio perspective, markets were up, but portfolios are down yesterday. Today could well be the reverse. Let's bring the heat map up on the screen and show you what's moving and what's not. Ultratech continues to move higher and Grasim continues to have that tailwind. So both of these are up. M&M, interestingly, is up 1.5%. Could it be because of the launch? Unless I missed something else. Maybe Tamanna and Samina will mention that. But M&M, clearly the top gainer. iShares, Hero MotoCorp, maybe ahead of the monthly auto sales numbers. Some of the auto stocks are very active. So watch out for those. Watch out for SBI Life and HDFC Life. A bit of a bounce for HDFC Life today after the cut that we saw in trade yesterday. SBI Life had a good number and it continues to do well. Interesting to see what SBI Cards is doing after this move. But anyways, we'll come to that in a moment. Watch out for M&M though. It's up 2%. What's not doing well? Hardly anything. I mean, the top loser is Bharti, which is less than 0.5%. So clearly, the morning belongs to the gainers, even as the index is flat, dominated by autos, Tamanna.
So M&M, that interesting we ran a small clip from Mr. Jejurikar. The reason is that M&M did not have a very strong product versus say a Brezza, and compact SUVs is where all the numbers are coming from. So perhaps that's why, this new entrant, which is expected to be quite competitive, and also it's ahead of the auto sales. Let's just pull up the small and mid-cap indices before we go to specific stories this morning. Marginally better than what the Nifty and Sensex are doing, about 0.5% up on the mid-cap 150. Let's pull up the small cap as well, just about 0.5% up. Perhaps you won't see too many volumes ahead of a mid-week break, and that's what you could be seeing going through. But nevertheless, some interesting stocks that you should watch. Let's start with Trent. Upgrades all the way on Trent, and upside being seen on their numbers. And the Zudio story is clearly still going strong. Not just Zudio, but it's a Star Bazaar. All of it going strong. The new stores, increase by Zudio is also helping. Margins have been decent, though high employee costs have cut into them. But essentially, a clutch of brokerages very positive on Trent this morning. That stock up 5%. It barely had a chance to react before numbers were out during close yesterday, last few minutes. But you're possibly seeing that reaction today. So Trent is having a good morning. Tata Chemicals, I must pull up. So another company from the same stable, but a disappointing Q4, clearly 3% down, not as sharply as what we saw in the first few minutes of pre-open session, but nevertheless a weak morning, no doubt. Poonawalla FinCorp is something we should also track. Again, a results sort of impact. Positive for Poonawalla FinCorp, negative for Birlasoft. What's bothering the street perhaps on Birlasoft is their TCVs not as good as they could be, and what is the issue there? We're going to be speaking to the management in a bit. The CFO will join us and we'll ask that question. Vesuvius is the other one that I wanted to pull up. Again, a results play, but look at that move. 14% up this morning. If you'd watched our trade setup, that was definitely up there, and Vesuvius is really fired on the back of their numbers, great margins as well. Just KEC International is the last one that I want to quickly check what's happening. A clutch of order wins, 1,036 crores in all, and that stock up 4% as well. So some real movers there as well, Samina.
It's looking good. The broader markets that weren't too excited in trade yesterday are doing pretty well in trade this morning. Outperformance on the mid-cap and the small-cap indexes compared to the benchmark. The mid-cap index is up 0.5%. The small-cap index trades with a gain of 0.6%. Top gainer in the broader markets this morning on the Nifty 500 is Kalpataru Projects with a gain of 9% as we see it. So big move coming on Kalpataru. KPIT Technologies, they reported numbers and the reaction is pretty solid. They have reported a profit of 74 crores, rising 31% YOY. Revenues as well came in at 228 crores, up 24.7% YOY. On back of that, KFin is seeing a good move, a 6% up move as we have it. KEI Industries, BSE is seeing a good technical pullback after a 13% decline yesterday. Nearly 4% high on BSE this morning. Some low-level buying is what's emerging. Technically, it could potentially be called a dead cat bounce for now. So no fundamental change in the counter, but on the charts, the stock is up about 4% as we see it. Well, a few other ones that I want to quickly mention on terms of losers that are doing what they're doing this morning. Apollo Hospitals and HCL Tech. Let's see, we've seen some buying coming there as well after a decline yesterday. Apollo, there's no relief, it trades flat. Well, at least it stopped falling. HCL Tech also trading with a marginal uptick in early trade. Well, along with that, Thermax is up 3.5%. Take a look at Shoppers Stop. They reported numbers too. It'll be interesting to see how Shoppers Stop is doing, 2.5% higher. Good numbers there. Profits were up 23 crores. Healthy top line, other income. All in all, it looks pretty good for Shoppers Stop. The stock is up 2.5%. Well, RITES, the company has received a letter of acceptance from the Bangladesh Rail for the supply of 200 broad gauge passenger carriages, on back of which this counter is up 3%. Spandana Spurti, if you can pull that one up, see what the counter is doing, reacting to numbers in early trade, 4% higher in Spandana as well. While we're at it and discussing earnings, Poonawalla has had a good run. UCO Bank, pre-open was indicating to a bad start for the counter, but this morning, Poonawalla is off the day's hype on. UCO Bank not doing too badly. It's trading flat, so no major concerns there on that one as well. Supreme Industries, it was your top winner in trade yesterday. Let's see if there is follow-on buying that's coming in. Trades flat, so it's actually after its biggest up move seen in over 2 decades, the counter is looking good. Jayaprakash Associates, Godrej Industries are some of the other top gainers. So all in all, it's a morning when the benchmark may be quiet, but the broader markets are seeing a pretty sharp recovery, or rather actually outperforming the benchmark. So mid and small up about 0.5% as we see it. Rachit, you want to come in on a couple of these movers this morning? Auto seems to be a theme this morning across the large cap universe. Any of those auto stocks ahead of auto numbers you would consider going long on?
Well, I would bet on Mahindra and Mahindra primarily because I don't think Maruti will go much further up from here. It is coming. Maruti's move will be capped anywhere between 13,200 to about 13,500 max before a substantial correction happens. Whereas in case of Mahindra and Mahindra, now that it is above 2,100, it can move up to say 2,180, 2,220, that kind of range, and it has done some consolidation. It has the better potential to move up from here.
You know, if age was just a number when it comes to beauty, valuations is just a number when it comes to Trent. Up 5%, 4,573 and counting. This one just doesn't seem to see any kind of gravity. Expensive stock, but well, the results being digested, the commentary being digested, and the stock is knocking on highs yet again. Sunny Agarwal, what do you tell a client who is asking you whether she or he can invest into Trent at the current valuations?
Niraj, for the trend, understanding the fundamental, having a knowledge of fundamental is a big handicap if you want to study the trend. Currently trading close to 150 time price to earning multiple, although the company is expected to double the earning to 2000 crore in the next 2 years, still will be available at 75 price to earning multiple 2 year down the line. I think, again, we always recommend that it's a buy on deep kind of a story, and any slight disappointment on number front can lead to a big derating also. So need to be slightly cautious on stocks which are trading at an expensive valuation.
Thermax has a good move too in the session today, and Shoppers Stop, I don't know if it's a retail kind of follow-up out there because the numbers were okay. But the stock is up about 3%, so that's pretty interesting.
Good rise, Niraj, 62% YOY in terms of profit.
But it seems some one-offs because the margin
other
performance
income
was flattish.
So there was a little bit of other income that came in, but nevertheless...
guess what's down 5%?
Spark.
No points. No points for
No, the
guessing.
reason why I thought it would have been different.
No prize for guessing.
No, that's the only reason why I thought it might have been different because yesterday there were some blocks done at a lower circuit. So there is some buying starting to emerge in Spark.
When will this fall?
So I think the prize goes to
abate?
whoever guesses when the turnaround happens.
I think Niraj is calling that. Maybe Thursday might be a morning of a little bit of an uptick.
No, I think we should ask Rajat Bose.
40% for the month.
We should ask Rajat Bose. At some point, Rajat, we got tired of talking about Spark every day, so we let it go. But if I had to pull up the 1 month chart, it's just
Chart?
okay, the 1 month CD, downward CD. it's one understands that there was a downslide, so there is an issue fundamentally. One trial of theirs didn't work out, but the beating that the stock is taking. Do you see any sort of light at the end of this tunnel?
Well, I would say that now that it has come close to its support zone is between, say, 200 to about 230. And if it were to fall below 200, then all hell will break loose. But there will be, since it is falling on very little volume, only one day there was a high volume activity. It would have been much better had it been given a 20% circuit kind of thing. In that case, the circuit business would have come to an end much earlier. But immediately, only thing is that it can give a bounce back because it has fallen so much. But otherwise, that would still be a dead cat bounce unless it takes out 300.
40% downtick this month on Spark, and it's not finding its bottom just yet. At least that's what the chart is looking like, or the CD, like Tamanna called it. But real estate's not doing too bad. Anything, it could be a morning when, after a little bit of underperformance yesterday, the whole real estate pack is having a little bit of a decent day. So Kalpataru projects, Godrej are trading with a positive bias. Phoenix Mills is up 2.5% as well. Some of those names across real estate may not be doing too badly. IT continues to be soft. Sunny, anything in the realty pack that you like? Anything that looks good? Some of those numbers we've seen, and we've also seen, those monthly sale numbers, pre-bookings rather. How do you feel about this pack? And if anything that you're constructive on, please share with our viewers.
So on real estate side, we are constructing on Anantaraj Industries. Reported very solid set of numbers. At the same time, they are diversifying into the data center, although the scale of business is minuscule at a current juncture, close to 3 megawatt data center operational. The aspiration is to go to 300 megawatt in the span of next 3 to 4 years. Very solid set of number, and with the execution likely to increase on their Birla project. I think Anantaraj is one of our top pick as far as the real estate sector is concerned. Another pick which I like is from Birla Group, which is a Century Textile. So we have seen a very solid set of numbers delivered by the Century Textile, and at the same time they have diversified from the Mumbai market to the other territory also. So that's, I think, on the verge of becoming a pan-India player. So these are our top 2 players as far as the residential segment is concerned. On commercial side, we like Phoenix Mill. So the company continue to deliver a solid set of number as far as a mall business is concerned, rental business is concerned, and that continue to remain our top pick as a proxy play to the urban consumption. So
Yeah. Kalpataru doing exceptionally well this morning. I just also want to pull up Mahindra Life Spaces. Took quite a knock after their numbers were out. But Kalpataru up about 9%. Mahindra Life's recovering a bit after the beating that came in yesterday. But another sort of counter which I think would be interesting to discuss, and let me get Sunny's take on this, is Birlasoft. We're going to be speaking in just a few minutes from now with the company. Now, their revenues and their margins relatively seem okay, but it seems to be the deal wins which has the street a bit worried. On the larger scale, or on the bell curve, I suppose, of IT companies, where would you peg Birlasoft, Sunny?
After a kind of muted set of number for Birlasoft, I think the companies which are reporting a kind of healthy set of outlook, a case in point, companies like KPIT, wherein the company has went on record to say that 18 to 20% is a kind of structural growth which the company can post for next 2 to 3 years. So those are the few names where we would like to place my fresh bet as far as IT sector is concerned. But in terms of price point, I think all the companies which are reporting a muted set of number may continue to see a time-wise correction. Maybe price-wise, they will continue to hover at a current juncture, whether it is Infosys, TCS, and Birlasoft. And once the demand environment improves, maybe post that we may see some earning upgrade coming for all these companies. So meanwhile, companies which are reporting a healthy set of numbers and outlook. So I think one company which fall in that bracket is the KPIT Tech, which has reported number yesterday evening. And again, a very robust set of commentary coming from KPIT management.
Sunny and Rajat, take a moment to thank you for joining you. They really appreciate your time this morning. We take a quick break and we do an IT conversation on the other side. Birlasoft followed by KPIT. Stay tuned.
Welcome back. The focus on Birlasoft this morning, and Kamini Shah, the CFO, with us. Now, on the face of it, their EBIT and margins are better than expected. Revenues a little under expectations. Net profits are okay, but it is the TCVs, the total contract value, that perhaps has bothered the street a tad. I must add that headcount has improved, which is unlike a lot of other IT players in this pack. Kamini Shah with us. Kamini Shah, very good morning. Thank you for joining us. Let's start with your take on your numbers. I have sort of spelled out all the qualifiers that have come in since your numbers and what brokerages are saying, etc. Let's begin specifically on TCVs. That drop seems to be bothering analysts who track your company very closely. How do you look at that?
So first of all, thank you for having me here. It's a pleasure to talk to all of you, right? I know you want to talk specifically about TCV, but I'll take a minute to just say that the current year that has gone by has actually been the foundation year for us. We put our strategy in place and a lot of it has been working well. So I think from a year-to-year standpoint, we've grown from a revenue standpoint, if you do at X and Vakir, almost at a double-digit level at about 9.5%, and on rupee terms at about 12.7%. Now, if you look at the TCV, actually, we've closed a year at about 875 million, which is higher than what we had closed the previous year. Yeah, our pipeline is looking very strong at this point of time. And our customers are taking a little bit of time in terms of closing some deals. So to that extent, deal cycles are a little longer. Yes, there is a macroeconomic situation in place, but we are not too worried given that our pipeline is strong at this point of time. So there are quarters where the TCV would be very good. There are some quarters where it would be a little muted, right? But we are very focused to make sure that we continue to execute on the ground.
What are the kind of sort of forward-looking outlook you see for your TCVs? I know there's no specific guideline this time round, but
we normally don't give guidelines, but I can only reiterate what I said, right? I think if you really look at our client budgets, and I'll give you a little bit of perspective around that, with the customers that we work with, the budgets have not come down. So, the budgets have been more or less in line with what was there last year. It's just that clients have taken a little bit of time to decide on where they want to spend as far as the current year is concerned. So which is the reason their Q1, which is our Q4, has been a little slow to start with, right? But I will reiterate what I said, right? Our pipeline is looking very strong. There are very few deals that we are losing at this point of time, which are significant to call out. But I think our teams are executing on the ground to make sure that we work with them. I think the focus will be a lot on cost takeout deals at this point of time, driving more efficiencies and productivity. The discretionary spends will come back, but that might take a quarter or two for the business.
Green shoots, ma'am. Are you seeing green shoots of in terms of your conversations with clients of those discretionary spends coming back?
We are. I'm not saying we are not, which is why I said it might be a quarter or two out, right? But we are definitely seeing green shoots around the whole piece in terms of it. So if you really look back, you see that we've done well as far as the year is concerned. So I think we will continue to execute. We are here to build the business for the long term. And, we'll stay focused to make sure that we put all the right building blocks in place.
From what I infer from what you said that, and I'm going to ask this the way it is. So are you saying this quarter there's a decline in TCV because of the seasonal element? Because you started by saying that some quarters are weak, some are not very weak. And and you also indicate that budgets haven't reduced, but they haven't gone up either year on year. So if I look at both those factors, I also add to that while commitments may be coming in, execution timelines are still a challenge for the IT sector and for you as well. So keeping those three factors in mind and non-committal clients, next couple of quarters may still be tough. Would that be a fair assumption for us to make?
See, I think the macroeconomics has not changed too much. I think we need to acknowledge that for the IT sector, right? But there are two good things that have happened, and I want to call that out, right? One is the fact that I think a lot of companies are now open to having a lot of tier 2 players into the midst, which opens up a lot of opportunities for us from a standpoint. Budgets have not declined, which I see as a positive at this point of time. I think this with the other factor above, I think places us in a good position to go all out. But yes, the decision cycles will take its own time to that extent. It's very difficult for me to say how the next 1 or 2 quarters will pan out because we don't give guidance to that extent. I will keep saying that I don't think there is much change from a macroeconomic standpoint. And the way we've executed in the current year, we will continue to focus on that.
It is tough times and it's unprecedented because it just seems so much more long drawn in terms of what the IT sector unfortunately is going through. And sorry, we're not trying to pin you down. We're just trying to get a sense of what really is going on, because it's also surprising for us sitting on the other side, not running your business. Give me a sense of hiring. Last quarter, your hiring numbers were pretty good. You had managed to, take into account those hikes, and keeping all that in mind, the company was doing well. Give me a sense of, are you hiring more? Is Gen AI replacing, improving efficiency internally as well? What is recruitment looking like right now?
I think we continue to hire to meet business needs. And if you really look at it, we have not cut headcount. You will not hear that in any of our quarters that we've executed in the past, nor do we see that in the upcoming quarters at this point of time. The second thing that we want to call out is, like, as far as Gen AI is concerned, we are using that actually to drive a lot of our internal productivity to essentially, make things easier for our people internally within the organization. We are running a tech transformation program called Optimus, where we will drive and simplify a lot of our processes, right? Now, what it means is that if we release time for people to do repetitive work, which does not add too much of value beyond a point of time, we use them to do other things for them, which also keeps the employees satisfied. And this in turn becomes a good platform for us to take to the marketplace. So Gen AI is definitely something that will help us, but I don't think we should be worried that it will be cutting down jobs at this point of time. I think it will only help us drive more efficiencies and reutilize that workforce into something else.
Any big deals that are in the pipeline that you want to tell us about, any conversations that are underway? And also, what we've seen with some of those companies as well, a lot of your clients are spending on cost optimization. The savings are being used for transformational work. And I think that could be a sweet spot to be in, right? Because if 25 is that, then money saved is also going to be spent coming back into your wallet. Are you picking that up with some of your bigger clients? And no clients lost this quarter, right?
No. So I will answer this in two parts, right? One is the fact that, yes, clients are focused on cost takeout deals and productivity deals. And I mentioned earlier, that gives us a great opportunity to participate, because now they're opening it up to a lot of players like us. So there's a great opportunity over there. Two is, if you really look at our strategy that we had laid out, our focus is on supersizing our large accounts. So you would see that our top 5, 10, 20 accounts have actually grown significantly higher than the company average. And we continue with our rationalization of tail accounts, right? And that is a very specific focus strategy. We were about 288 clients end of Q4 in FY23. We have come down to close to about 259, 260. So, that rationalization will continue, but that's a very focused rationalization because it helps us overall, even from a margin standpoint, or if the clients are non-strategic.
Neat. Good luck, Kamini, and we wish you well. Hopefully FY25 is better and more directional than FY24 for you and for your industry. We'll connect soon again. That's Birlasoft, the management, highlighting for us what's worked and what's not worked for them this quarter. While TCVs have declined, it does seem like the macro environment is still a challenge to navigate. We'll take a break on that note, but we'll talk to KPIT and see how's it going with them on the other side, so stay tuned.
Courtesy what KPIT Tech has done all through FY24, which has done well and upped the guidance. Most notes this morning, which have analyzed the numbers in the call, say that the first time guidance for KPIT for FY25 is 18 to 22%. I want to get in Mr. Ravi Pandit, co-founder and chairman of KPIT, to talk about what was FY24 looking like, and more importantly, what is his outlook for FY25. Mr. Pandit, good talking to you. Thanks for taking the time out, and this must be an interesting line for you to read, that everybody is now saying that the first time guidance is 18 to 22 because everybody believes that at some point of time in the year, you'll revise it higher.
Well, let's see how the year goes.
Yeah, but 18 to 20%, 18 to 22, let's assume that that's the growth. Even if it comes in at a lower end, that still is a bit of a present continuous for you in terms of your performance, because you've spoken about it all through the last 24 months that you see about circa 20% growth for the multiple years. So I think that confidence stays.
That's true. That is true.
Okay. Is the story still the same? Auto OEM spending, you benefiting from all of that?
Yes.
And that's
Absolutely. Okay. So the major factors which are making a change in the industry, such as the software-defined vehicles, I spoke about it last time, electrification, autonomy, all these continue to be the same. And the auto industry continues to invest in these areas because this is really the shape of things to come when it comes to the automotive industry. So we expect the continuum of these investments.
Having said that, I mean, just the way your outperformance came up in FY24 over FY23, would it be safe to assume that you are being conservative while the environment may be a bit more bullish, just that you want to err on the side of caution?
No, but you know that we always give our outlook on the basis of what is a very clear visibility, and we have been very transparent with the market. As and when we see that there is a room or reason to up the guidance, we do it, and that's what we did last time twice. So let's all hope that something like that happens. But at the same time, it is important to realize that the industry is tightening its belt, so I think it's good to be cautious. The headroom for growth of R&D is large, but we have to see how the year pans out.
Okay. One note, Mr. Pandit, that I read speaks of, some issues. I would love to discuss some of these with you. So one of the notes says that headwinds are likely to emerge as some existing programs by OEMs near an end based on the new vehicle production timeline by auto OEMs that they have analyzed. How would you respond to this?
Now, see, we have to recognize that any new production program goes through a cycle. And, every new program goes through a new technology or a new hypothesis on the basis of which the program is made. So we now see quite a few programs running on what we call as software-defined vehicles, which, as I mentioned, is a fundamental shift in the whole auto industry. Those programs are continuing to ramp up. And I think the early adapters will probably come into production in 25, 26, and the later ones will go all the way up to 29, 30, etc. So I don't imagine that these major programs will really make any difference. I think they will continue. And, the program starts with initiation and goes as far as we are concerned, all the way up to verification, validation, which is kind of towards the tail end of the program. So we see a healthy movement towards that. We see more and more auto OEMs really shifting their business model to the newly defined, software-defined vehicles.
Okay. This commentary has come up that, and you were asked on the call, I believe, yesterday as well about this, that hybrids are coming up across the world, if you will. And I know you stated that hybrids do not pose a challenge to the spend on electrification. My question, though, is this, Mr. Pandit, that even if hybrids were to become larger than what they are right now, let's assume for a hypothesis, does that curtail the spends that companies do on software in their cars through companies like yours, even if it's a hybrid company and not an EV?
Yeah. No, I think it's important to understand what basically is a hybrid technology. A hybrid technology uses the conventional engine, the IC engine, as well as a battery. Whereas a pure IC engine uses only IC engine, and a pure battery uses only pure battery. Now, when you are using both an engine and a battery, you have to really decide when to kick in the engine and when to kick in the battery. Now, that is software driven. So how do you decide what is the driving regime of a vehicle? When do you draw on the battery? To what extent you draw on the battery? How do you balance it? When do you charge the battery? Now, these are all complex questions. And these are the ones which really are very amenable for software solutions. So I believe that whether it is hybrid or whether it is EV, the investment on software will not change. Actually, in the hybrid case, it's a little more complex. We expect the investment to be higher.
Okay, so hybrids is not a challenge. Great. Okay, in the presentation yesterday on the exchanges, you said that over a period, we will look at adjacencies in the overall mobility space, example IFE, which would have equal or more opportunities led by similar technologies. Now, one, is the need for looking at adjacencies a part of natural evolution of KPIT, or is this being felt because at some point of time, auto spends will not be enough to do the 20% growth number that you envisage over a period of years?
No, I believe that at least for the next 5-10 years, auto R&D area is large enough to give us a good headroom for growth. But we are a growth-driven company, and we want to use the technologies that we have developed in adjacencies. So if you were to look at an IFE, which is an industrial and farm equipment area, the commonality between that and the automotive industry are extremely strong. There is a movement towards autonomous vehicles. There is a movement towards electrification. There is a need for energy regeneration, energy capture. So imagine in the case of a crane, the arm moves up, you use the energy for it. When it goes down, there is energy lost. In a typical hybrid, you would capture all that energy. So there is a possibility of using all these technologies in all these new areas. The kind of forces which drove the auto industry towards electrification are equally applicable when it comes to off-highway or IFEs, etc. So we believe that our technologies and our knowledge can be very easily used in the new industries. Typically, you have to remember that the auto industry is a major investor in the new technologies, and those technologies can be easily percolated to other industries. So we see a good possibility. We believe that these industries will gain from our presence, and we believe that we will gain from working in these areas. So this is not driven by a fear that the auto industry doesn't provide enough headroom for growth, but this is driven by the fact that our special expertise can be used in the other industry, and it can funnel our future growth.
Can this become meaningfully large over a period of time? And if so, when? I mean, let's say by 2030 or something, does it contribute meaningfully adjacencies to the overall pie?
Yes, it would. Yeah. So, we are very particular about what kind of companies or what kind of adjacencies we will go for.
Right.
I told you the first filter. Our first filter is that it should use the technologies that we have. Our second filter is that the expense on R&D in this industry has to be high. Our third filter is that there should be a few companies who are dominant in those areas, in these industries, so that we have to serve limited number of customers to get a lot more depth. This is the playbook that we have been using in the automotive industry. You are aware of our T25 strategy. We don't deal with a whole bunch of companies. We deal with a few companies, partner with them. We become their trusted partners by really going deep into their operations. So we want to get into those adjacencies where this model can be replicated.
Got it. A word on the margins. You've brought out an extended ESOP program, and accounting for that, you've guided to 20%. Brokerages are talking of meaningful margin levers in this growth backdrop for the outer years of 20% growth, because had it not been for the ESOP program, you're effectively saying your margins could actually have been maybe 21.5.
Yes, but you see, Niraj, I think we have to recognize that we are a growth company. We want to continue to make investments to make this growth continuous. So if not in ESOP, we would invest more in engineering. We will invest more in getting into new areas. We will invest more in picking up new geographies. delivering new practices. So I think a margin of 20% or so is a decent margin. And any more money that we make, we would first like to invest in the growth of our company. So I wouldn't want anybody to bake in a much higher margin in their models. We would not do that.
Got it. Okay. Couple of other things. I mean, we've spoken about 2 large deals in the last 12 to 18 months, landmark as they may be. Are there more in the offing? Because again, your numbers, as you yourself say, account visibility that you have and conversations that you're having which could lead to conversions. My question is, are any of these conversations leading to conversions talking of a large landmark deal the way it happened with Renault or with Honda?
We are hoping for that, but I won't say that this is definitely on the anvil. I think it's important for me to state that, we look at our strategic accounts in multiple layers. So we have the platinum accounts, we have diamond accounts, we have gold accounts. If you were to look at our growth in the last year, and that is what we have published, our key strategic account, platinum accounts have given us the highest growth. We are working with the remaining accounts as well. And as we work deeply with them in their core programs, there is a possibility that something new can happen. And we are hopeful that more and more clients will be using our services more in depth. And you have also, what is the addition that we have done to our pipeline in the last quarter. It has been a healthy addition.
Got it. Okay. One thing that maybe at least some people want clarity around, and there is a timeline now to it. I believe you pronounce this as Corix, the JV with ZF in the middleware segment. I believe you said that it is expected to obtain regulatory approval in the June 2024 quarter. Now, assuming that all goes as per plan, what does this do? What's the nature of this JV and what does it do to business, part one? And what does it do, let's say, to numbers in FY25 or FY26 as the case may be?
Let me explain what the JV is all about. We are a services company. And whenever we want to get into any software products, we need to work in a different environment with different set of people and with a different partner. This is a JV for a software product in the domain of middleware. Now, what that means is that in this company, we will continue to make and sell software products, predominantly in the middleware area, which is really a large upcoming area. As far as KPIT is concerned, we will be doing all the work that comes from integration of this product into the architecture of our client companies. In KPIT, since the focus is on integration, we will work not only with our own product, which is a Corix product, but we will also be able to work with others who have products and which are being used by the OEMs. So the way we hope to look for attraction is our share of the profits of the company from the sale of the software product, but more importantly, our income as integration partners for the software product. I can't put a number on it just now, but this is significant. And we have partnered with a global tier one, a well-respected tier one. So both of us feel that there is a good room for growth. So I think it should give us good traction in the next 2-3 years.
Okay. So just last question, while you may not be able to put numbers to this one, and I appreciate that, but would these meaningful traction start immediately once the regulatory approval is done and therefore in FY25? Or could it take shape and form, let's say, in FY26? Because I heard you say 2-3 years.
Yeah. The team has been put in place. We have taken significantly highly experienced executives on it. The conversations regarding the usage of the product by customers have started. We might get some trickle revenues. But, for the product to establish itself, for the customers to use it more and more, it would take a couple of years.
Mr. Pandit, before we thank you, seems a very confident picture. Any risks on the horizon?
The risks are the normal macro risks. You know that the world is in the phase of deglobalization. So we have to become local companies in every area in which we operate. And that's a broader risk. We don't see any risk on the matter of in the area of client spend. We don't see any risk in the area of getting the right kind of talent. You talked about ESOPs that we have done. That would really give long-term incentives to our core people. So I don't see really a risk in that area. But we have to be cognizant about what could happen at a macro level, not at an individual, industry level.
Got it. Mr. Pandit, appreciate you joining us and giving us this perspective. Thanks so much for taking the time out, and all the best for FY25.
Thank you, Niraj. Always a pleasure.
No, the pleasure is entirely mine, Mr. Pandit. And viewers, well, that's a confident KPIT Tech, cautiously optimistic, cautious because of the environment that it stays, but believes, he did mention in the interview, that the auto industry is strong enough, or the auto industry spends are good enough for them to have growth the way they envisage for the next 5 to 10 years, and they are already thinking of adjacencies. So pretty interesting. Nevertheless, the stock is down today, but auto by and large has done okay for itself. At least auto has. Maybe auto software isn't, but auto has. M&M and some of the other two-wheeler companies are all doing well for themselves in the session today. So that's one aspect to watch out for in trade. We also have a new listing, and we'll get to that in moments from now, because J&K India, the shares will debut on the stock exchanges today. 649 crore or 650 crore IPO, subscribed 28 times on the third and the final day of its listing. I believe the market anticipated a premium of 120 or 130 rupees maybe on listing for this IPO. Now the question only is, can it do that, or will it do more post-listing? I think that's the key thing to come out. But keep in mind, just the subscription numbers, the business commentary that the company is given ahead of the IPO, all seems to suggest that the start will be strong. And there goes the gong. We'll just get the listing up. It's about